Kim Daly, thank you so much for joining us today on Screw the Stock Market. We're really happy to have you.
I can't wait to be your guest. Thank you so much.
Well, the time has come. So normally the way that we structure the shows is we'll start with you sharing a little bit about your personal life, who you are, where you came from, and how you got to where you are. And then we'll jump into the essence, the content of what we'll be talking about. And in this case today, we'll be talking about franchises. So it's really exciting because I think for a lot of our listeners, the idea of a franchise is appealing, right? It's a real business. It's a real asset that's putting money in our pockets. But a lot of us think, hey, I have to be Shaquille O'Neal or one of these big time people who's already wealthy to be able to invest in and own a franchise. So I hope you're going to help us figure out how that can be possible, even if we're not already one of those big time retired NBA players with a size 22 shoe.
I love it, Alex. I'm going to set the record straight today.
All right. Awesome. Well, yeah, please. I'll go ahead and just give you a little bit of a chance to introduce yourself and then we'll go from there.
Okay. So as Alex said, my name is Kim Daly and I am one of America's top franchise consultants. I've spent the last 20 years helping people realize their dreams of business ownership through franchising. I offer a free service that coaches people through the process because most people, when they come to the idea of owning a business, they think about what they know or maybe what their community needs or what they think they might enjoy investing in. But I'll tell you, as a very tenured, experienced franchise consultant, those are not the reasons to say yes to a franchise. So when people come to me with their ideas, I love it, but then I want to help open their mind and help them understand the breadth and the scope that franchising includes, because most of the franchise businesses that really are the ways that true wealth can be created are not the brands that people come to me asking for or thinking about. Not in all cases, but in some cases. So I have a free service that helps people align their finances, their goals, and their interest with the right franchises for them. And then I coach them through about a 1 to 2 month due diligence process so they can feel competent, that they're asking the right questions, talking to the right people. I'm the resource for financing, going through those legal documents. Like, I'm the resource for how to buy a franchise, but the candidates work with the individual franchisors then to really figure out among the group of franchises we've aligned for them, which one feels like the best fit. So I've been blessed to do that for 20 years and help so many people. Today I have a YouTube channel at Kim Daly, my last name, Daly, kimdaly.tv, which is just a free resource where I dispel myths. I teach people about franchising. I interview guests. I talk to lenders and franchisors and franchisees. I have over 300 videos there as of this recording. So please check out kimdaly.tv.
Wow, you've been busy. Okay.
Yeah. How did you get into this niche of becoming such a top consultant in franchising?
Wait a minute, Aziz, are you saying that it's not obvious that I rolled out of bed one day and said, oh yeah, I can't wait to be a franchise consultant? Nobody says that. I totally know. So no, I mean, literally, I was on my way to med school in college and my whole life was about going to medical school. I answered a classified ad one summer and it literally changed my life. My dad told me, don't take that job because you'll never go to med school. And I said, oh, Dad, I'm totally going to go to med school. Fire your dad's always right. So it was for a franchise company, not the one I'm with today, but it exposed me to this industry of people helping people. And every day people wake up to realize their dreams and other people are there to support those dreams. It's just an awesome industry. And I fell in love. I felt like I found my heaven on earth. So I did what every good business owner does. I went and started a business on my own because entrepreneurship is better than franchising. So we can talk about that later, but I'm just telling you that it's not. And it only took me 5 years to figure out that's the hardest way to own a business. I came back to my franchising roots when I was 29. And I actually just turned 50 a couple of months ago. So I celebrated my 20th anniversary this past February. Yeah, so I've been doing this for a long time.
And let me just add, for those who can't see her on the screen, she does not look 50 at all.
God bless you. God bless you.
Maybe franchising, there's more to this franchising thing than even the finance, right?
Yeah,
Maybe it's a fountain of youth. All right.
Well, that's just being happy. I'm super passionate about what I do because I love helping people. Like that's my greatest joy, waking up every day, meeting new people, coaching them through a process that hopefully will change their life. And then they brag on me to their family and friends, and then their family and friends call me. I mean, I'm 100% referral driven because I'm blessed to help a lot of people.
Amazing.
That's great. So where do we start then? Okay, so I'm a regular guy. Let's say I happen to be a government employee. My salary's set, and the future for me looks like I need to sit at this desk for the next 30 years. And just kind of hope for the best that someday there will be enough in my retirement account so that I can retire.
My soul just died a little bit from that description.
Mine too. My heart would go out to you, Alex, if that was a true story. But you know what? It is a true story for many people. And you know what? Listen, there are people that love their jobs. So I never want to like put down what anybody else decides to do for a W-2 job. I'm just here to help like open a world of, hey, kind of like a can of worms maybe, but if you love your W-2 job and you're like, look, I'm looking for diversification, or maybe you have a glass ceiling like Alex was defining, or you're like, is there going to be enough money when this is done? I don't know. Again, and you're looking for a better place to put those money that you would put into like a deferred, tax account, like a 401k into a cash flowing asset. That's where franchising can win. And franchising compared to entrepreneurship, the right franchise opportunity would allow you to even keep your full-time job. So you can straddle both worlds. You don't have to completely give that up. Like most entrepreneurs, in order to really lift a business from ground zero, right? It takes a lot of time, a lot of energy, and a lot of money. And then after all that, most of them fail, right? But in a franchise, because you can go in partnered with a leadership team that has a vision and a proven playbook, and they can train you or your manager, and they've created the technology, like they've created the toolbox, the marketing. They have training, again, for you and your employees. They have technology that allows you to manage your business so you're not like doing mountains of paperwork, if you will, right? And even a technology that would allow you from the desk at your W-2 job to log in and like know how many customers were served today in your business, or what the status of revenue was in your company. So because of that toolbox and that technology, that allows an owner in some instances to come in as what we call a semi-absentee investor. I'll never use the word passive, right? It's different than real estate or storage or anything like that, right? That can truly be passive. A business always requires a leader. That leadership may only be 5 hours a week in some cases, but it still requires a leader. So it's never going to be passive, but we use the term semi-absentee. So you could consider, wow, I could keep my job, keep my stable income, keep my benefits, keep my marriage, because your spouse might freak out if you say, honey, I'm quitting my job to start my dream franchise, right? Keep everything stable over there, but be building your dream. So one day you can see an exit from that W-2 job and not have to quit the job and then go work in your business. If the franchise started without you, has all the right team and people in place, then when that business can afford your lifestyle, you now have the freedom to decide, what do I do? Do I come back to Kim Daly and buy another franchise? Do I take this business and multiply it to multiple locations? Do I semi-retire? Like now you have options.
And that's the key word. That's really what this show is about. Screw the stock market's a great title. But the truth is we're focused on freedom. That's really what I want. That's what Aziz wants. And I think that's what our listeners want at the end of the day.
Alex, for 20 years, I've sat here and told people, look, I am not selling franchising. I'm not really selling anything, maybe my process. But if I'm selling anything, it's freedom, right? Every single person who comes to me is seeking freedom, whether they define it as financial independence or quality of life. Like many times if you work for somebody else, right, you're kind of enslaved to like their schedule and when they tell you can have vacation, or right, you have FaceTime, you have to be in an office a certain number of hours, like just no control over your free time. So, but it comes back to freedom. So you're so right. Freedom to make the big decisions in your life, freedom to reap the full reward for all the effort that you've put into your business, freedom to have unlimited earnings, to take the vacations that you want. And through my 25 years of being self-employed, I've figured some things out along the way. I was a biochemistry major, so I love to remind people that if I can do it, you can do it. I was not a business major. I've never taken a business class in my entire life. I built the franchise that I'm part of to the largest in history. Back in 2012, I had a standout year. I broke free from the pack in franchise consulting and built the largest franchise consulting business in the history of franchise consulting. And I've spent the last decade growing that, teaching other people how to do it. And now I kind of have a science to what I do that I can share with you, the listeners, with any candidate that I work with, that I call my Millionaire Mindset Coaching Plan, which is a, get ready for it, daily plan. Because it's a daily mindset. Thank you to my last name. But it's a daily mindset of how do you build, like, how do you eat an elephant one bite at a time? How do you build $1 million business one day at a time? And learning what to be focused on each and every day that you come to work. And that allows people to, going back to freedom, to really define the number of days that they want to work. Once they understand how my daily plan works, I say, look, you can take as many vacations as you want. You can take as much time off as you want. It just means that on the days that you are in your office, you need to be, you or your manager need to be that much more effective at what you do.
So to get to the more practical aspect of things, because I love this. I love everything you just said. But to put it into implementation, first of all, what's the kind of profit margins that most franchises kind of provide for people? Like, what should people expect as I mean, I know it differs between different types of franchises, but on average, what kind of numbers do you think that most people should be expecting? Like, one franchise is enough for you to be like, oh, okay, I've got half my salary covered now, or is it something a little bit more difficult to kind of build up over time?
Yeah, it's a really great question. So a franchise consultant should never make earnings claims to anyone. If you're ever working with a franchise consultant and they're making earnings claims, please fire that consultant. So I'm not actually going to answer that question. But what I will say is that when candidates come to me and I gather their net worth and we talk about what their money buys, because before we can talk about what you're going to earn, we need to talk about what your money buys and money going into the business. This conversation allows me to really educate people about what franchises cost and why. There's a lot of myths out there, especially that, franchises are more expensive than startup businesses. I love that. It's a total myth. Okay, guys, look, the reason 90% of businesses fail, startup businesses fail, what's the reason? Entrepreneurs run out of money. So why do 90% or more franchise businesses, are they successful? Because you come properly capitalized. So franchises are not more expensive. It's like, that's what it actually costs to build a positively cash flowing business with infrastructure and technology and people in place so that owners are not buying themselves a job, right? If you buy yourself a job, it's not a business. There's no freedom in that. I mean, maybe some, right? But to where you get to be the CEO of your business in your life, working on your business rather than in your business. So once I explain to you what your money buys visually, we talk about the types of businesses there are and how that relates to the owner's time commitment, skill set in the business, right? Now we can talk about which kind of businesses are going to have more of what I would call unlimited returns and which types of businesses come with more of a capped return. I will say, because we were talking about food before we started recording, as one of America's top franchise consultants, you have to beg me to show you food. I know everybody's like, yeah, but food, Kim, they're so popular. But
that's the main thing people think about when they think of franchising. It's like a McDonald's or Wendy's or something.
But it's really one of the hardest ways to make money for the average person. There are just faster, easier, less costly investments where you can make more money, have fewer employees, work fewer hours. Have I hit all the hot buttons yet? Yeah. So why would you ever pick food? Like, I can bring you food, but I'm going to challenge you to take the same characteristics of what you think you love about a food business and apply it to another type of business where there's higher margins or reoccurring revenue or membership. That's my favorite, right? Where we can control the fixed costs. And then you can know, okay, with 200 members, all of my fixed costs are covered. And guess what happens to the owner at that point? They start sleeping peacefully at night, right? Because as soon as you debit everybody's credit card on the first of the month, all of your bills are covered, right? Those costs that you cannot escape with food are what drive the margin so slim and keep owners stressing all the time. And then you add in you can't really predict the traffic pattern. When you have a business wrapped in a membership with controlled fixed costs, so now you can sleep peacefully when you get to your break-even membership. But then what happens as you grow your membership below? What happens is your bottom line grows exponentially. So in a typical business that maybe nets 20%, so on $1 million, some people are netting somewhere between 150 and 200 grand. In a membership driven business, now you see that margin growing to 25, 30, maybe even more. There are some businesses out there where on $1 million in top line revenue, owners clear 400 grand. That's never going to happen in food ever. So I can't make the earnings claim to anybody, but I can educate and we can talk about scale because you were right, Aziz. It's about multiplying the location. The wealth is always created through scale in anything that you're going to do, right? It's never about one business or one piece of equipment or one truck or one team. It's always about how can I scale this, right, without stressing out myself or maximizing my time. So when you see the infrastructure that's built in a franchise that allows you to scale quickly, then you can see how that wealth really gets created where you're like, okay, so one location or like if you had a 1-800-GOT-JUNK, that's a franchise, right? So you're looking at the revenue per truck. That's what I mean by per equipment or per truck. Or if you had a cleaning company, it's revenue per team. Okay, so one team can produce X amount of revenue. I want to build a business that has 10 teams or 10 trucks or 10 locations. So I take the time to educate people and I don't make any earnings claims, but they very quickly understand. And then after I've educated, now they can intelligently say to me, well, then based on the facts, Kim, I'm interested in this business or this type of business. You get it?
Right. Now, you did mention some membership-based type franchises. Can you give examples?
There are memberships for everything. We have a swim school that's wrapped in a membership called Big Blue Swim School. Maybe you've seen it. So it's swimming lessons, but it's in a membership. We have things like day spas, like facials or eyelash extensions, Beauty World. Those are wrapped in membership. Gym memberships, of course. That's the lowest hanging fruit. We have like Massage Envy. You know, they created a membership for massage, right? So in the beginning, we were all like, what does that even get you? But, you know, today, 10, 15 years later, everybody has a membership for massage, right? So there's so many things. There are even car washes today that have a membership where when you figure out the math, once you're on a membership, every car wash is like $5, right? So a lot of really smart franchisors are getting into this, how can we have a membership where our owners can have that predictable, scalable revenue, create some benefit for our actual end user too, to where we can just keep debiting their credit card, but it's an advantage to them as well as to our investors. It just, again, it creates that more predictable, scalable revenue pattern, which is what really every investor wants.
Yeah. And it's interesting. Now that you started listing them, it was like, yeah, I actually was aware of all of those. I just never conceptualized them with the concept of a franchise for some reason in my head. Again, I'm stuck on the restaurants angle. Most people.
The recurring revenue is really where it's at. I mean, like I love to give the example of, so I use a franchise to clean my house. So I'm a single mom and I got 2 teenage boys and I never just have 2, like downstairs right now, I've got 5 kids down there. God knows what they're doing. So like I need my house cleaned every week right now. And so, but I've had that for, I think the 8 years I've lived in this house. So if you think about it, right? So those girls come every Monday morning at 10 o'clock, they clean my house and they bill my credit card $135 a week. You do the math. I'm not doing it. I just love the effect. I don't think about the money. I can afford it. So right? But as a business owner, right? That's a beautiful business. 8 years, you just bill this woman's credit card every Monday for $135. Multiply that by 600 customers or whatever, 1,000 customers, right? What about the guys that spray? We have a pool, the mosquito squad that sprays the mosquitoes in my backyard, right? Another business. That's even less. That's even more of a no-brainer. Those guys send me a contract over email in February, which I haven't talked to anybody in 10 years. I've been a customer for 10 years, haven't talked to anybody. They email me a contract. I pick the selections I want. It totals it for me. They have my credit card on file. And then sometime in May, when the mosquitoes are here in New Hampshire, they start walking on my yard and spray my yard every 2 or 3 weeks. In October, they're done and the whole cycle repeats. I mean, that's a no-brainer business, right?
That's amazing.
Yeah, there's so many businesses. When you think of it from the owner's perspective, it's like, this is like the best business. Why would you have that food thing with all of those potential headaches and problems when you can have something like so simple with huge profit margins?
Alex, why haven't we thought of this?
Well, we didn't have a daily plan. So where do we get started? I'm sold. Aziz sold. What do we do now?
So the first thing I do is I have people fill out a very basic questionnaire. First, I would ask you to go to kimdaly.tv and watch some of my videos. Get educated, like learn about, well, why don't I need experience to own a franchise business? Because that's another myth. People think, well, Kim, I'm not a plumber. I can't own a plumbing business, or I'm not a personal trainer. What if someone doesn't show up to teach a 5 a.m. class? I can't teach the class. You don't have to in a franchise business. There are ways around those things that franchisors have already worked out. We need business owners with basic skills, sales skills, management skills, operational skills, CEOs who have vision and strategy, right? Who have the financial capability to build this business using the proven playbook from the franchisor. So you don't have to come with the special skills. I always say, if the franchisor needs a special skill, they will say that. They're not trying to screw you over by selling you a franchise that you're not qualified to run. Who does that benefit, right? So I say, watch some of my videos, get some of those big myths that you probably don't even realize you have. But once you watch the video, you'll be like, oh my God, I do think that. And I know that because, like I said, before I had Kim Daly TV, I've been doing this for 20 years. I used to travel all over the country before the pandemic and get in front of people. That's how I built my candidate list, right? By hosting live events, and people would throw all kinds of questions at me. And it's not the question, it's like the tone in their voice when they ask the question, like those evil franchisors. And so anyway, that's how we get started. You go to my YouTube channel, you can contact me through there. And then we very quickly get into some deep conversations, like I said, about what your money buys and what you can comfortably afford. And I find the franchises, then I put you together in what I call a blind date, and then off we go, and I start coaching you on how to feel competent that you're asking the right questions.
Hey there, just wanted to take a minute to thank you for tuning into the show. It really means a lot to us. We hope that you're getting a lot of value out of it. And in that spirit, we're trying to find other venues to engage with you to be able to continue to share value in different ways. So we want to encourage you to go ahead and tune in and follow us on Instagram at Screw the Stock Market Show. We have a YouTube channel set up where we'll be posting entire episodes and other relevant content there. And on our website, screwthestockmarket.com, where we'll be posting focused on action steps and other resources for you and for us to be able to take action with the lessons that we're learning from all the guests that we're having on the show. So thanks again for tuning in, and we hope that you're getting a lot of value from this and enjoy the show.
Now, I did have one question that you kind of briefly touched on earlier. You said that like a lot of the myths about the high buy-ins and all this other things. What's the bare minimum that someone should have in hand to start considering getting into a franchise?
Okay, it's a really great question. And again, like the earnings claim one, it's a little bit hard for me to answer in this format, and I'll tell you why. So there are franchise investments that are $20,000, $30,000, $40,000 all in. And there are franchises that are $2, $3, $4, $5 million all in, right? This is part of why I have a business, to pre-qualify people, to help you focus your time on businesses that you can safely and comfortably afford. But even after all of that, so there are qualifiers that franchisors have. Franchisors typically have a liquid asset requirement. and a net worth requirement. So liquidity in our equation is cash, stocks and bonds, 401k plans, because there's a way that you can use your 401k without creating a taxable event for the purposes of starting a business. So that can count as a liquid asset. And then also equity in the home. So those 4 things count as liquid assets for us. And then your net worth you'd add in like maybe secondary properties or boats or other assets that you might have, life insurance, cash value, things like that, that would total your net worth. But so you have these franchisors have these requirements, but then there's lending. So sometimes right now, the government has been super high on lending. Like it's been awesome what's been happening with the lending world. So maybe your total franchise is 150 grand and you go to an SBA lender and they say, sure, we have this thing called an SBA Express loan. If you come with the first 15,000, we'll give you an unsecured line of credit for the rest. So the franchisor may say, well, we want you to have 100,000 in liquid assets for this business and a net worth of 250. But then you go to the lender and they're like, in actuality, you only needed 15 grand cash, but you needed that net worth to qualify for that type of a loan. Do you understand? Or maybe it's your debt to income ratio or the household income you have coming in that qualified you. So it's kind of a complicated question to answer in this format, which again is why I have a business to help people understand it and then to lead them to all of the resources. So before they rush to judgment about what they can or can't afford, we can ask the right questions to the right people and see what the answers are.
Yeah, essentially there's options.
Yeah. And what else, Aziz? So since the pandemic, if you have a business that requires a lease, like the landlords, I mean, the leases that some of these franchisees have been getting are like historically low, especially if you're looking for a really big space, because a lot of companies that went remote decided to never go back, right, to that location. So these landlords they love franchising because they know franchises are more stable. So they're kicking back 50% of the build out cost. So like if you're looking on paper at an investment, that's like 800,000. But then before you judge that, I tell people, look, you got to go out and we've got to interview some of the franchisees who've opened recently, because if the landlord kicks back, let's say that 800,000 is what it costs to build the location out, but the landlord kicks back 400 grand of that. And then you get a loan and the bank gives you 300,000 in a loan. I mean, you may come to the table with 50 or 100 grand, right? So, and then not to mention, how does the money roll in? If you're selling something with a membership where you can start doing pre-sales during construction, you may open cash flow even, right? So this story is never as it appears. Well, I won't say never. That's not a good word. Rarely as it appears on paper. The story has to be brought to life through conversation, first with the franchisor to learn, and then validated out by their family of franchise owners to see out in the real world, how's it going for people that don't have a dog in the fight and they're not trying to sell you something. They're just sharing with you what their real world experience has been. And that's what we do as consultants. I guide people through both. First, we get educated from franchisors, and then we go out and we validate in the real world with existing franchise owners. And then ultimately, you decide for you what feels right for you.
What would you say is the easiest franchise to run, just in general?
Easiest franchise to run, but I think, Aziz, the answer would depend on what is the primary skill the owner has. So if someone loves to prospect and cold call and drive activity, they're like an activity animal, they could get into something super low investment because money and time are inversely related. So the lower the investment of money, the bigger the investment of owner time commitment. The bigger the investment, like storage business, which are franchises, right? How many self-storage owners do you think actually work in their self-storage? Like 0, right? That's like a 5-hour a week, if that, right? For that investor. So right. Money and time are inversely related. So it comes back to that owner's skill and what you think is easy, right? And then my understanding of what's out there and matching you with those businesses that you would say are easy. There's really no easy way. Knowing what I know, it's like sometimes too much to like answer the simple questions in a simple way. You know what I mean? Right. Like I think my business is really simple, but my business is endlessly complicated. All new consultants are like, you make it seem so easy, Kim. I'm like, yeah, because I've been doing it for 20 years. Like I have more than 10,000 hours of experience, which makes me an expert.
I think the big takeaway, which reminds me of the Rich Dad, Poor Dad book, right? Which is when you have the mentality of, I guess his before mentality is, oh, I can't afford that. And the conversation stops right there. And what you're saying is to have the after having read Rich Dad, Poor Dad mentality, which is, how can I afford that? And what can I get? What can I afford? Which are both a little bit more open-ended questions, which might not be as simple, but as long as you're talking to someone who's knowledgeable and a professional who can guide you through it, you can probably do something more than what you think you can do.
Possibly. And I won't waste your time, but I'll also never send you away like with your tail between your legs. Like I invest time with everybody who wants to learn. My services are free. So I tell people, don't disqualify yourself because you think you can't afford it, right? Because I said there are businesses in all different levels. And if I'm uncertain before we even begin, I'll send you over to my friends who all they do is finance franchise businesses, and let's see what they can put together. Because they may come back and go, oh no, this guy has great credit as this. We could do this kind of loan for this. But now when they come back and they give me a solid number, well, that gives me a parameter to play within. So I'm never going to send somebody away just go, nope, you can't afford it. Sorry. Like that's not helpful. If people go away because now is not the right time financially, they go away empowered, knowing what they have to save and when to call me back. So it's always worth reaching out if you're interested and curious about what's out there for you. And I would add to your Robert Kiyosaki, like in the cash flow quadrant book, so a franchise, that's where I thought you were going. A franchise is a cash flowing asset, right? So moving your money to the side of the quadrant where you're building cash flowing assets for yourself, right? That's the way to really build wealth.
Oh, yeah.
Tax advantages, cash flow.
That's a clear objective. And I think for me, one of those things has always been, obviously now, since we started doing the show, the challenges have kind of shifted, right? First, it was, hey, we didn't know what was possible. We didn't know what was out there. Now with the show, it's almost the opposite problem where every week we're talking with someone saying, hey, this is the path, go down that road. And then someone else will come on the next week and say, this is the path, go down that road.
Yeah.
And so I think from our perspective, it's cool to be exposed to everything. But I'll say that probably over the next few weeks and months, Aziz and I got to really regroup and say, hey, we've brought in a ton of data, a bunch of information for ourselves and our audience. What's next? Like we really have to at some point take action and again, I'll always disclose that I'm a big believer in multifamily apartments, right? That's a big part of why we started the show is I tried to raise money for apartments and I said, hey, and when someone said to me, oh, I'd love to invest in that. That sounds like a great opportunity, but I'm too busy investing for my retirement in my 401k. There was a disconnect there and that's the impetus of the show. But I am always a believer in, like you said, moving to that side of the cash flow quadrant. And we're really excited to learn more about this. Yeah.
You know what? I have every candidate that I work with begin with a goals and dreams worksheet. Because if you don't know why you want a franchise investment and what you're moving toward or trying to move toward, you cannot identify the right business for that journey. Once people get really clear, and I am very well versed in other types of passive investments, I have them myself. I have relationships to lead people to. So I always say just like well-diversified stock portfolio, you've got high-tech stocks and blue chip stocks and maybe some bonds. The same thing can happen in an asset-driven portfolio, right? And even within franchising, we can look at the newest up-and-coming brands that are more pioneering and maybe have more trajectory to go up. Or we can look at the more stable, steady, tried and true brands that are maybe a little bit flat, but they're maybe a little bit safer, if you will. But it all comes back to what the investor is using the investment for how long they want to be involved, right? So if you're trying to do something for 10 to 15 years, you want something that you feel is going to be around for 10 to 15 years, right? And that's kind of hard to predict. But if it's something like an irrigation system, okay, irrigation systems may change over time. And we have to believe the franchisor would change with them. But irrigation in general is an industry that's probably not changing too much in 15 years. That's what I mean. versus like someone who maybe gets into fitness, which people say, well, what about if nobody wants to do this thing in 15 years? I'm like, well, why would you own a fitness thing for 15 years? That's a rocket ship. That's a business you get in, you make a ton of money, have a ton of fun for the first 5 to 7 years, and then you sell it and get out, right? Right? When the brand is at its peak, like Orange Theory had a peak, you get out, you let it be somebody else's thing. And if it keeps on going, awesome, but it's not your thing anymore, right? So by knowing what your goals are, what you're trying to achieve, and in what time frame, then I can figure out what are the right franchise vehicles to get you from here to there. So my expertise is in advice in franchising, but there are certainly investors that I've worked with where in getting to know them, I thought you would be better in doing something maybe in multifamily real estate syndication or something where it's truly passive for you at this point. And then I can lead them to those investors as well.
Give them my number, okay?
Yeah, okay, you got it.
So then that's exciting. I had a question. I can't think of it right now.
I think we covered the basics. Like, are there any other myths? I'm trying to think of the myths that other people may have. Like, I feel like I need to know something about it, or food and retail, or I can't afford it. Those are some of the biggest myths out there. Right. We talked about semi-absentee ownership. So our W-2 people who love their stable career. And most importantly, I would say love your marriage, because there's look, in a marriage, there's usually one person who's more adventurous and one person who's more conservative. And that adventurous person, no doubt, is the person that's reaching out to me to say, hey, I think we want to build a legacy for our kids. We want to start a franchise. And the spouse who's not on the phone is the one I really need to talk to, is going, no. And so, the option of having that semi-absentee business, which would allow you to appease your more conservative spouse by keeping your job, but then appeasing your own entrepreneurial desires and to build something greater for your future that you own and control, we can accomplish both.
I had one quick question that you just kind of briefly mentioned earlier. Knowing when to get out of a franchise, is there any particular metric you should look for? Like when you've realized, okay, it's peaked, I've made my money, I need to get out now.
I think the metric you look for is your own goals. I think it always comes back. So one thing we really haven't talked about is success and failure in a franchise. So there is a myth out there that when you buy a franchise, it's foolproof, right? Or when people say, yeah, well, I know nothing's a guarantee, but they still go in with some expectation that it's the franchisor's job to make them successful. So if you have that belief, you absolutely have to go to kimdaly.tv. It is not the franchisor's job. It is the franchisor's job to build for you a proven playbook and to provide systems and tools and training and encouragement. But they know their plan works, but they don't know the extent to which you will work the plan. So success or failure in a franchise business is 100% owner driven. And I can prove that in much greater conversations all day long. So when it comes to when is the time to exit, again, I think it's based on your own goals or getting into a business and realizing, honestly, this is not for me, and selling it before the whole ship goes down, right? Why run it into the ground? If the franchisor that you're a part of is still selling franchises, then even if that business is frustrating and not working out for you, what you've created has value. In fact, just this morning, I'm working with a candidate in Dallas who some franchise owner in 2020 built this little fitness boutique, and then she went AWOL. So eventually they were able to terminate her legally because she didn't do anything with the business that she built. And now they know that I do a lot of work in Dallas. So they came to me and said, hey, we have this existing studio. It's built out. We're looking for a new owner. So instead of having to spend $300,000 or $400,000 to build out the studio, the new person can walk in and pay a franchise fee of like $40,000 or something. My candidate, she said to me today, so she goes, I'm the most interested in this business because I can literally get the keys tomorrow, pay them $40,000, get the keys and walk in. And all I need is working capital to get this thing up and operating. And this is like the largest fitness franchisor in the world. Like they have every tool for every tool, right? So it's a no-brainer. And so, I mean, going back to what you said about exit strategy, like that opportunity that unsad opportunity for one owner creates an amazing opportunity for an owner with the right mindset, right? And I'm not judging anybody. Everybody went through 2020 the way they went through it, right? But with really strong leadership, most of the franchises that I work with, like I didn't have any franchise as a company implode. I saw unprecedented leadership by franchisors. And that's really what this is about, is finding people that you believe in, not widgets. You're always buying people, leadership, vision, and people that have the money to build a brand. So exit strategy is owner created based on your goals, when you think it's the right time for you to get out, or if you're trying to build something for your kids, then it's to get it to where you can pass it on to your children.
One other question, since I come from this world of multifamily, now, if I wanted to aim for one of those higher ticket franchises that is in that spectrum that you described, maybe less time involvement, but more money involved, do franchisors care if I went out and syndicated and raised $5 million to go and buy one of these very expensive high-end franchises? Or do they care that it's me and I only have the amount in the bank? And
that's a terrific question. And it probably depends on the franchisor, and it depends how it's presented. So most franchisors, if you're showing on paper, like the capital that you've raised or you're going to raise, they're not going to question it. They just want to make sure that you have the money. They want to make sure that they're not awarding a franchise to somebody who's going to fail. Because contrary to popular opinion, the right franchisors really do care about your success. So some may question it more than others. Some may want to meet. Like, what happens though, like I say to people when they're like, well, I'm going to get partners. I'm like, really? Because if you're going into a business to be the boss and have control, the minute you bring in a partner, you just gave up 50% of the control, right? So people think, yeah, I can go in to a bigger business with more money because I have a partner. I'm like, yeah, but you're also going to get half of the output. I'd rather find you a business that you can comfortably afford on your own and scale to a level where you can 100% control all of it. But even if after all that, I always tell people, my advice is free. You can do what you want. It's your life. So if you decided to raise the money, like I said, some franchisors might never question it. And then others might want to know, like, who are the principals? Because whose names are going to be on the franchise agreement? Who is the relationship for them? Who is the relationship primarily going to be with? And if that's just you and how you have the money is not disclosed, you probably could get away with that.
Very interesting. Okay. And then I guess lastly, I remember I had one conversation with a potential franchisor where they didn't like the fact that my stated goal from the beginning was essentially to be working on the business instead of in the business, as you described it. They just wanted someone who was in it, right?
Sure.
And so they stated that very upfront, and we didn't waste very much time.
Parted ways.
Yeah. But I was kind of surprised. And I said, I mean, that's kind of the whole point of that cash flow quadrant, right? I want my assets making money. I don't want to buy a job. So you've mentioned that several times today. And so it seems like it's common enough that there are franchisors who understand that and support it. I guess I just wanted to confirm that with you, like in terms of, I don't know if you'd feel comfortable with percentages, but there's enough out there that could be my objective and we can make it work.
Oh, 100%. But this is why I have a business. And depends how long ago you were looking. I think franchising continues as an industry, continues to grow and get stronger and better. And franchisors realize that franchising is attracting more high-level investors that really want the outcome, the cash flow, and have the business acumen, but they want to employ other people to do the day-to-day job. And so more franchisors are coming with more structure and more training and more better toolboxes that allow the owner to not be there. But it always comes back to who's in charge of this. Because if you're going to leave your business in the hands of a manager, the reality is you're probably going to have to incentivize that manager with some equity or some type of a bonus above and beyond. Like when we get to this level of people want to know what's in it for me. Why am I going to put my heart and soul into this? So the franchisor just, again, wants to make sure if they're awarding you the business that you have either the person in mind to run that business for you if it's not you, or they can very clearly say to you, you need to go find that person. We'll help you. We might even train that person, but you need a leader. A business needs a day-to-day leader, right? There's no such thing as a business that runs without a leader. Now, as we talked about before we were recording, there's a special class of franchise businesses. There's not a ton of options, but like the best example to visualize is like a laundromat. So I actually work with a couple of laundromat franchises. So laundromats are the epitome in a trade-off of money for time. Big capital outlay to build it, but very minimal time commitment. But I didn't say no time commitment because most of these laundromats have like a wash and go service, fluff and fold or whatever for people who want to drop off, like dry cleaning, where they drop off their laundry. And it's not always, by the way, it's not always blue collar, like people, it's not so stereotypically that people think it is. In like metro areas, you'd be surprised how many executive men, right, who are bachelors will drop off their laundry. Like I'm surprised. I've learned so much about laundry. So anyway, the owners of these, the investors of these are still putting in probably 5 hours a week to collect the coins from the machines and to manage a small team of people. So you have that. But there are a couple of other options that are like that, maybe a little bit sexier in some cases than a laundromat. But then again, they still need somebody who has some focus a few hours a week on the business. But the vast majority of franchises out there, they need a business owner for the first 3 months, 6 months, 9 months. They need you to be fully dedicated to the success of this thing. And then once that you've got the right people and team in place, then you can slowly start to come back, right? And pull back. But in order to, again, get a business, a lot of franchisors have 7-figure goals for their first year owners. They want you to build $1 million business in 12 months. Well, that's no small feat. And that requires dedication. So sometimes it's understanding. People are like, well, I'm going to keep my job because I don't think the business can afford me. But what if the business can? So again, it comes back to your goals. Why do you think you want to keep that job? Why do you think you want to be part-time? What if you could leave the job, be full-time, and maybe even surpass your earning potential in corporate America within 1 to 2 years? Would you then get more excited about diving in full-time? And I don't mean full-time forever. I mean full-time to lift the brand from go.
Very interesting. No, I was going to say, thank you so much, Kim. I think we covered everything, everything that we could on this brief episode. But the big takeaway is always obviously to get educated, to continue to reach out to you, watch more of your free content that's out there, and to contact you to get to those first next steps. Is there anything else that you'd like to share with our audience before we end the call?
That's awesome, Alex. No, I mean, literally, you said it. Go to my YouTube channel if you want more coaching advice on franchising, business ownership, diversified investments, mindset coaching, because the Daily Coach, if she's anything, she's a mindset coach. Watch my videos. And then if I can help you learn more, absolutely feel free to reach out. As I said, my services are totally free. You never pay me any money. And I would love to be your daily coach.
That's amazing. Thank you so much, Kim.